Today we are going to solve one important problem in income from house property. It based on the co-ownership of a house with equal share. Let me read the question first. The two brothers Arun and Bimal are co-owners of a house with equal share. So the share of income will be divided by equally. The property was constructed during the financial year 1998-99. The property consists of 8 identical units and is situated at Cochin. So the total number of houses are 8 houses. During the financial year 2019-20, this year, each co-owner occupied 1 unit for residence and the balance of 6 units were let out at a rent of rupees 12,000 per month per unit. That means what? Total number of houses was? The total number of houses were 8. Out of that, 2 houses were occupied by 2 brothers, Arun and Bimal. So the remaining 6 houses, 6 units were let out at a rent of rupees 12,000 per month. That means what? Nearly 25% of the houses were occupied by Mr. Arun and Bimal. The balance 6 units, that is 75%, were let out at a rent of rupees 12,000. So we have to calculate 25% and 75%. In order to make you understand, I explained this one. And then the municipal value of the house property is rupees 9 lakhs. And then the municipal taxes are 20% of municipal value which were paid during the year. So from which we will calculate the expected rent and then actual rent, and then after comparing we can find out gross annual value. After that we have to deduct the municipal value and then we can reach the net annual value. From that we have to deduct some deductions according to the section 24A and B. So let me read again. The other expenses were as follows. The repairs 40,000, insurance rupees 15,000. So the repairs and insurance were given separately. If we take the standard deduction as per section 24A, so we need not care about this repairs and insurance. We can omit this one. And then point number 3, interest payable on loan taken for construction, rupees 3 lakhs. So it has to be taken into account both for self-occupied and let-out property. One of the let-out which units remain vacant for 4 months during the year. So please understand, please remember this point. So the total houses 8 houses. 2 houses, you have to deduct 2 houses which are let out. Which are self-occupied. So the remaining 6 units were let out at the rent of rupees 12,000. Out of which one of the let out units remain vacant for 4 months. So this is a unrealized rent. We have to deduct this unrealized rent from the actual rent. The other income of Mr. Arun and Mr. Bimal are rupees 2,90,000 and 1,80,000 respectively for financial year 2019-20. Here you have to calculate the income from house property and then the total income of 2 brothers for assessment year 2020-21. Let us solve the problem on the screen. Now let's prepare the note number 1. In order to compute the total income for assessment year 2020-21, we should prepare the income from house property for both Arun and Bimal at first, initially. So let us prepare this note first. The let out portions, please remember there are 8 houses. Out of 8 houses, 2 houses were occupied by Mr. Arun and Bimal each one. And then remaining 6 units were let out. That means 25% is self-occupied, 75% is let out. So now we are calculating the income from house property let out portion. So the let out portion is 75% because 2 houses out of 8 houses. So total 8 houses. So 2 houses self-occupied. So 6 units let out. So 6 divided by 8 into 100. That means 453 to 150 divided by 2, that is 75%. So it is not necessary. So 75% let out portion. And then for which we have to find out the gross annual value. Normally we have to find out expected rent. In order to find out expected rent, the municipal rent, a fair rent and then standard rent must be given. But here only municipal value is given. So you need not care about it. You can take only municipal value. The total municipal value is 9 lakhs. But our let out portion is 75%. So the municipal value of let out portion is 75% of 9 lakhs. That is coming around 6,75,000 rupees. So the municipal value, we can take it as a expected rent. And then we have to find out actual rent. In order to find out actual rent, is there any unrealized rent? Yes, there is unrealized rent. For one house, the 4 months rent has not been recovered so far. So we have to deduct this amount. So in order to find out the actual rent, 12,000 rupees per month, per house, per unit rent, and then 6 units, total units 6 units. So and then how many months? 12 months. So 12,000 into 6 into 12, that is total actual rent, out of which 1 unit for which the rent has not been recovered, that is 12,000 into 4 months. 4 months rent was not recovered. So this is a unrealized rent. So we have to deduct this from the original rent. Then it is a actual rent. It is coming around 8,16,000. Now we can find out GAV. We have to compare these two, the municipal value and actual rent. Which is higher? Actually, GAV is 8,16,000 rupees gross annual value. And then we have to deduct the municipal value pertaining to the let out portion from the GAV. Then we can find out net annual value. What is the municipal tax? The 20% of the municipal value. The total municipal value is 9 lakhs rupees. So pertaining to the let out portion is 20% of 9 lakhs, actually 1,80,000, out of which 75% of 1,80,000 is pertaining to the let out portion. Please remember, the total municipal value is given 9 lakhs. The municipal tax is 20%. So the total municipal tax is 1,80,000. This is for both portion, let out and then self-occupied. Here let out portion is 75%. So the municipal tax belong to the let out portion is 75% of 1,80,000, that is coming around 1,35,000 rupees. If we deduct, you can find out the net annual value, that is 6,81,000 rupees. So out of which we have to get standard deduction under section 24A. 24A standard deduction 30%. So 30% on 6,81,000. 6,81,000 into 30%, that is 2,04,300. And then interest on loan. In question itself, the interest is given 3 lakhs. 3 lakhs means total interest. So it is covering both let out portion and self-occupied portion. Here 75% is the self-occupied portion. So the total interest is 3 lakhs. So the interest belonging to the let out portion is 75% of 3 lakhs, that is 2,25,000. If we add these two, it will coming around 4,29,600 rupees. We have to deduct this amount. If we deduct this amount, the income from let out portion in aggregate, it is coming 2,51,200. It is for both the owner, the Arun and Bimal. So if we divide this portion, the income to Arun 1,25,850 and then income to Bimal 1,25,850. So this is a note number 1. After preparing this note, let us prepare the computation of total income for assessment year 2020-21, because income from other income, income from other sources or other income is also given. So if we calculate, if we add the total income, the income from house property and then income from other sources, if we add, then we can easily find out the total income of both Arun and Bimal. So what is a let out portion? Self-occupied portion. 25% is a self-occupied portion. For if it is a self-occupied portion, the annual value always nil. Understand? But we can enjoy the benefit according to section 24B, that is the interest deduction. Actually the total interest is 3 lakhs. 3 lakhs, out of 3 lakhs, 2 lakh 25,000 is covered for let out portion. The remaining 75,000 will be covered for self-occupied portion. If we divide the 75,000 by 2, that is 37,500 rupees. Each owner, each co-owner can enjoy. But according to law, it is restricted to only 30,000 for each. Understand? It is, we had already seen in our online classes. So it is restricted to 30,000 for each co-owner. So 30,000 rupees for Arun, 30,000 for Bimal. We can enjoy the deduction on interest on loan for borrowing loan in order to purchase that house. So if we deduct, so the net loss, this is a net loss or net loss on self-occupied property. This is 30,000 for Arun, 30,000 loss for Bimal. And then let out portion. What is the income from house property? According to the note that we have prepared here, the income from 1,25,850 for each Mr. Arun and Bimal respectively. So the income from house property according to the note prepared, so income 1,25,850, 1,25,850. So in let out portion income 1,25,850, 1,25,850. So from this let out portion income, if we deduct the loss from self-occupied, then we can find out the total income from house property. If we deduct, this is a income from let out portion 1,25,850. If we deduct the 30% loss of self-occupied, then the total income will be 95,850. So Bimal also the same amount, here 30,000, here 1,25,850. So it is also coming around 95,850. So this is the income from house property. Apart from that, some other income pertaining to Mr. Arun and Bimal is 2,90,000 and then 1,80,000. 2,90,000 for Arun, 1,80,000 for Bimal. So this is other income. If we add this total two income, we can get the total income of Mr. Arun and Bimal. It is coming around 3,85,850, 2,75,850 for Bimal, and then 3,85,850 for Mr. Arun. Okay.